Good morning, everybody. It's mid-morning, April the 4th, 2014. I'd like to review this morning's trade recommendations for the 10-year note and the E-mini. The 10-year note this morning, we started out wanting to sell 15s to 19s, and we had our buy down at 5 to 9. We saw a trading range market with a downward bias, with a lower bias. The high is 15 and the low is 9. So our trade recommendations caught both edges of the market, and that's exactly what happened. Pretty hard to get much better than that. Looking at the F4 screen, which is where our trade setups are generated, we have very nice setup for us on the sell-off of 15. And we're waiting for the retest of 9 before we get our recommended or prescribed trade set up from which to take the trade. But you can see right here that our retest failure trade, which requires a retest of support and or resistance, and in this case resistance right here, is our retest failure trade. You could have taken that trade as high as 14 to as low as 13.5 on a sell stop, or 14 on a limit sell. Market did trade to 15, and the first stop was at 11, and you made our 2 to 3 seconds as the trading methodology yields. We expect to make 2 to 3 seconds on our first trades of the day. So the note worked out pretty much as expected. Looking at the E-mini this morning, we were only interested in the buy side. We thought everything was pointed higher, and the market didn't disappoint us. So we come in and take a look at we'll come in and take a look at the structure, and you can see that we're dealing with nothing but P's. You can see that volume is moving higher in each of the distributions. Started off wanting to buy 65, 67. Then we said might take 68s to get in. The A period low stopped just above 68, so you were put into a situation of having to buy breakouts, which would have had you long in the 70 area to as high as 72. And so far the market has traded up to 77. So the idea was to be long, and the way you had to take the trade was on a breakout basis, which is prescribed in the methodology. The strongest trades come from breakout situations, and you can see right here that volume is moving up in the distributions, and this favors higher prices, and that's where the idea came from. Looking at the F4 screen, which is where we do our execution, this was the area that we had hoped to be a buyer down in this area when we first started out early this morning. But you're forced into a breakout situation. So here's your breakout the first time, here's your breakout the second time, and here's your breakout the third time. And all of them would have yielded profitable trades. Now you can see right here we've got profile information in each one of our bars, and this is the VWrap, and a limit buy against the VWrap, or the mode, the purple line. Is another way of entering the market. So it's a breakout trade. We wanted to be long. We had to take the trade on a breakout basis, and we saw 75 as first resistance, and then we've got 80 to 82 as our second spot. So the idea was correct. Our entry rule